Stocks trade in a narrow band as concerns over slowing Chinese consumption square off against expectations of a US Federal Reserve rate cut. FMCG and healthcare are the only prominent gainers, even as energy and metals, along with autos, drag.
Crude oil prices slumped to a three-year low, down 18% this quarter, with Brent slipping below $70 per barrel. Concerns over slowing global economy weigh even as fears of short-term supply disruption due to Storm Francine spark a bounce.
BMW cuts its guidance, joining European automakers like Volkswagen that are feeling the heat in a tough business environment. Indian vendors like Samvardhan and Motherson feel the heat even as concerns rise over JLR's ability to escape unscathed.
A well-studied Kamala Harris trounced an ill-prepared Donald Trump in their first presidential debate. The outcome led some to call for sacking of Trump's preparatory team, even as music icon Taylor Swift threw her weight behind Harris. Well, hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, today is a day where we are seeing a bit of a mixed picture at this point in time. We have the Bank Nifty, which is in the red, but we have the Nifty, which is in the green at this point, so up around 50 odd points. What stands out is the outperformance for the mid-cap index. In fact, today is a day where we're seeing a tight range in terms of what the Nifty is trading in. It's around a 100-point range that we've traded in at this point in time. Mid-caps are outperforming, and on a week-to-date basis, in fact, the broader markets have done better than the Nifty. Week-to-date mid-cap index at current reckoning has already gained around 1.5% versus the Nifty, which is up around 0.8%, and even the small-cap index, which is up around 1.1% on a week-to-date basis at current reckoning. So otherwise, advanced decline ratio also in positive terrain for the second day running, so that too should go down as a positive. Let's see if it sustains.
Let's see if it sustains. You know, we're in the middle of the week, middle of the trading day, and also the middle of the range that the market has been in. You know, 24,900 to about 25,100 is where the Nifty has been ranged into, currently testing the higher end of that range. What will be interesting is how the Nifty Bank performs ahead of the weekly options expiry. The Nifty Bank is again, 51,000 to 51,400 is the range, right in the middle. 51,200 thereabouts is where it is right now. 51,400 is the 50-day moving average. So for it to cross past that would be an important task for Street to see further short covering on the Nifty Bank itself. Midcaps doing well. The FMCG sector has definitely been the toast of this week so far. So we have, names like HUL, which is up almost 4% this week at fresh 52-week high for that counter. Similar is the case for Britannia as well, holding above that 6,000 mark for the first time ever. So currently at a fresh 52-week high for that counter as well. And from the broader markets, we are seeing names like Godrej Consumer, Jyoti Labs, as well as Imami and Dabur. All of them do extremely well too. In the consumption space, though, the one pack that really stands out is the paint pack, and that's largely because of an overnight decline in crude prices that we've seen. So if you pull up the charts of Asian Paints, Berger, Kansai Nerolac, Indigo Paints, all of them have been buzzing. So let's put the spotlight on the paint sector itself in this value plus segment. What is it that is working for the paint companies? The first thing that's working for them is that demand is picking up. If you look at the commentary of all these companies post their first quarter numbers, they've expected double-digit volume growth in FY25, a mild narrowing of the gap between volume and value growth as well. Volumes would be aided by a rural uptake, and more importantly, all these companies have already taken a 1 to 2% sort of paint price hike, and despite that, crude oil and other raw material costs are near one-year low. In crude's case, it's below what we've seen since December 2021 as well. So raw material prices are fairly benign. The second factor is competition. So on the competition coming in from Birla Opus so far, all these companies in their conference call have perhaps sized up the competition or think it's not as intense as the Street was fearing. So Asian Paints has said that new launch seems to have underperformed expectations with regards to Birla Opus. Berger Paints too said that initial enthusiasm of the new entrant appears to be fading away, including among dealers, and that's an important parameter to watch out for the paint companies. Kansai Nerolac says that they now have higher confidence versus what it was 6 months ago in their ability to compete with newer entrants, so that works for them. And Indigo Paints too, here on CNBC-TV18 itself, said that they've observed no changes in the competitive landscape or even pricing pressure. So with demand looking good and raw material prices coming down ahead of the festive season, No major concerns with regards to competition. The street is perhaps betting on the paint space itself. From a valuation standpoint as well, because of the recent underperformance, they are trading at 54 times for Asian Paints as against historic valuations of over 60 times. Berger Paints itself is trading at around 49 times, and Indigo Paints at around 38 times as well. From here on, the things to track will now be, one, how Birla Opus actually performs in the festive season, because for paints, festive season is extremely important. So irrespective of how the competition has scaled up so far, their performance in the festive season is something that will be the true test of how competition has panned out. Secondly, the overall festive demand by itself and the raw material price environment. Even though we've seen some decline in crude prices and they are benign, whether they sustain at these levels, is there any more volatility here or not, is something that we'll be tracking very closely.
Okay, all right, Manglam. Thanks very much for that. So that the entire paint space is buzzing today also because of that benefit for crude prices, which are currently at around $68, $69 per barrel. So it would be a positive on an operating front for them. But let's move on then. Brokerage firm Jefferies has come out with some new changes for its India model portfolio. Hormuz is here with the details.
It's an interesting note that has come out from Jefferies, and they maintain their 28 buy recommendations, but the number of underperformed recommendations that they have doubled to 10 as per their latest model portfolio. And they say that this increase in the underperformed recommendations is in line with the near-term cautious stance that they have on the market. As a result of which they are overweight on sectors like financials, they are overweight on staples, telecom, but they are underweight on sectors like IT, energy, and even consumer discretionary is where they remain underweight on. And as a result, they have also come out with some buy recommendations and some underperform calls as well. ITC is one of them. They are expecting the FMCG revenue to accelerate in FY25. They are expecting a 10% EPS CAGR for ITC, which they say is lower compared to peers, but is still reasonable. And their valuations for ITC is in line with pre-COVID historical valuations as well. Zydus Life is one of them. The other one, they say that the US pipeline that they have is the best among the peers, and the street is not factoring that potential of that pipeline enough in their estimates, as a result of which they have a outperform recommendation on Zydus Life as well. Now, within the underperformed names, Dixon Technologies is the one that stands out. The stock has rallied over 140% in the last 12 months, and as a result of which, and courtesy of the punchy valuations, is what keeps them underweight on Dixon. They also say that the rally has resulted in Dixon trading at a significant premium to its global peers, and any form of demand concerns domestically should warrant a bit of caution on Dixon. Tata Power is another one. It's been a mover recently. They are underperform rating there as well. They say that they are worried about the execution delays and sustainable returns for Tata Power, and the capacity expansion initiatives that the company has taken in the renewable energy side, and the Odisha distribution business has also not shown any meaningful earnings upside potential, and as a result of which they are underweight on Tata Power, and they prefer NTPC and JSW Energy to play the India Power theme. Back to you guys.
All right, thanks a lot for that. So some new ideas from Jefferies, new underperform ideas, new outperform ideas as well. What we'll do is take a short break, come back. On the other side, we focus on the markets, perhaps put a spotlight on the steel sector as well, and get stock specific. Stay tuned.
Welcome back. Well, for the markets, it's still quiet at this point in time. We have the Bank Nifty, which is a bit under pressure. Separately, in terms of specific stocks, just want to point out that a lot of the auto stocks are doing well. So Bajaj Auto, for example, is up around 4%. Bajaj Finance, which has had a bit of a sluggish year, is up around 2.3% at this point in time. And we have something like an Asian Paints HUL, obviously gaining on the back of crude prices. Both those stocks are up anywhere between 1.4 to over 2%. But let's focus on the entire auto space. We do have some negative news coming in from the auto major BMW, which has lowered its 2024 profit margin outlook, citing issues in the braking system and sluggish demand in its key Chinese market. How will this impact the Indian auto suppliers? Vinny's been doing some data crunching. She joins in with the details. Vinny.
Thanks for that and good afternoon. So BMW has now become the fourth OEM globally who has actually cut the guidance this year following Porsche, Mercedes as well as Volkswagen. BMW revised its EBIT margin guidance for 2024, declining and making it at around 6 to 7% compared to the previous guidance of 8 to 10% for both the automotive segment as well as the motorcycle segment of the company. Now, Morgan Stanley is saying that they expect further risk coming in terms of OEM margins, predicting potential downgrades in the coming quarters for the global companies. Other than that, this move specifically is coming in because there's the sluggish demand that one is seeing in China that's highlighted at BMW, as well as the issue of the braking system that is supplied by Continental. That was a main factor yesterday and overnight that we saw BMW seeing a fall in trade and main concern for BMW in terms of their braking systems. Now, for Indian suppliers, there are 36 Indian suppliers who supply to BMW. Among them, some of the names are Samil, that around has 5% of the contribution of its revenue is for BMW, that they supply to BMW, so that revenue is 5%. Similarly, we have Rico Auto, that 11% of the revenue contribution is for BMW. Suprajit Engineering, Siad, Good Luck, Minda Corp, Apollo Tyres and Uno Minda among other suppliers who are there supplying to BMW. So yes, because of that, we've seen some bit of a pressure specifically coming in on Samil today. But turning to its peers like JLR, which is into the luxury market, luxury car market. Now, they said that yes, they are already facing EU challenges, China challenges in terms of the market and demand trends that was already highlighted by JLR. So yes, what analysts believe that now this seems to be already factored into JLR. So not much of a risk in terms of the China market, the demand trend that is sluggish. But yes, UBS today came out with a note on Tata Motors with a sell rating. 825 rupees is the target price. What they believe is that the new launches that were there by range for JLR, that was Range Rover Defender and Range Rover Sports. Now that maybe the demand trends and overall the sales could start plateauing, and that could be a risk for the company going forward. So potential margin slippage is what they're expecting for JLR, as well as overall for Tata Motors in terms of a risk coming in for the India as well as the PV and EV segment of the company. So that's why a sell rating, and Tata Motors is under pressure.
Down 5%. Vinny, thank you so much for pointing that out. Meanwhile, you're getting some lines coming in from Prime Minister Modi, who's speaking currently at the Semicon India 2024, saying that this is the right time to be in India, and when the chips are down, it's India you can bet on when that happens. So some wordplay coming out there with the semiconductor chips as well. So we'll keep getting some more lines from the Prime Minister and perhaps dip into that at some point too. But let's get you some source-based news where sources suggest that JSW Infra could actually launch a QIP. Vivek joins in with the details on that one and the rationale behind this. Vivek.
Well, that's right. So good afternoon to you. What we understand from our sources that JSW Infra is looking to raise a significant amount of funds, and the route that they've chosen or they're planning to choose for this particular fundraise is most likely going to be via the QIP route. Now, we understand from our sources that the company may look to raise funds in excess of 5,000 crore, and there will be a twofold reason as far as going ahead and raising this particular amount of funds, given the fact, number one, the company has significant growth capex lined up, both organic as well as inorganic growth plans that the company has, and along with that, they believe, sources indicate that this particular fundraise via QIP will lead to equity dilution that will also help bring down the promoter shareholding in the company, given the fact that the company by the end of next year will need to bring down the promoter shareholding to the 75% threshold as per SEBI's minimum public shareholding norms. Importantly, we reached out to the management of JSW Infra. At this point, the only response we got was they said that they would not like to comment on this particular development that we've raised. Just to give some perspective, number one, on September 9th, the company actually approved a capex of over 2,300 crore. This is for going ahead for organic capacity expansion as far as some of the existing ports are concerned, and also the company has publicly stated that they target to reach close to 400 million tons per annum of capacity from by FY30 from the current 170 million tons per annum. Along with that, remember, the company's promoter shareholding currently stands at 85.6%, which is expected, or the rule, SEBI rule mandates that it needs to be brought down to a little below 75%. Now, remember, there have been a couple of analysts who have written on the potential fundraise of the company. BNP Paribas says that a QIP size needs to be almost 14% of the current shareholding in order to enable the promoter holding to come below 75%. They believe that a successful fundraise in the range of close to 9,000 crore of equity could lead to 100 rupees per share impact if the company manages to demonstrate an 18% plus ROC return on this particular capital if they utilize it well. So an important development. It will be interesting to see as and when this particular development unfolds for JSW Infra.
Okay, all right, Vivek. Thanks very much for that. So that's on JSW Infra. That stock is up around 5% But let's move on to our special segment for this afternoon, Value Plus. Nigel is here to focus on the entire steel sector and what he's tracking there.
Well, that's right. Let's update you on how the steel sector dynamics are shaping up. And let's start with the dominant force, which is China. Now, in August, the Chinese steel exports, they surprised negatively. They rose by 21% on a month-on-month basis. And the monthly run rate of exports have been rising consistently over the last few years. That's primarily due to the weak domestic demand as a result of the declining property market. Now, this puts Chinese steel exports on course to hit 100 million tons in 2024. Now, that was last seen all the way back in 2016. Chinese steel prices as well have dropped to an 8-year low, and they're down close to around 15% from the first quarter FY25 average. That in turn is putting pressure on global steel prices as well. Now, in addition to that, let's focus on the raw material cost. Iron ore prices have slipped to $90 per ton. That's the first time since 2022. And the worry is iron ore inventory as Chinese ports have moved up. And now they're 30% above the average inventory levels in the same period last year. Now, weak Chinese prices, falling iron ore cost, well, they have put Indian steel prices at risk, as the domestic HRC prices have corrected by roughly around 4,500 rupees per ton in comparison to the first quarter average. The problem is that domestic steel prices are still at a 6,000 to 6,500 rupee premium in comparison to landed imported steel. Additionally, India continues to be a net importer of steel with approximately 413,000 tons of net imports in the last month or so. There are lots of negatives stacked up for the steel sector, but as we have seen in the past, the sector turns around when the street gets over pessimistic. So is that time round the corner? Time will tell.
Is that time around the corner? Time will tell. Nigel, thank you so much for that point well made. When there is so much pessimism, perhaps, you've been tracking it for a very long time to know that, the timing is always on the obverse side when there are so many pessimistic views.
Yeah, Mangalam, just a couple of more points. The thing is that at one particular point of time, the Chinese steel prices will have to stop falling. Why is that? Because beyond a particular level, they don't want to make that kind of losses. Yes. You'll want to stop the bleed at some point of time. From an India market perspective, what is negative is that iron ore prices are dipping. When iron ore prices are firm or they move up, actually India is at a bit of it's a positive for us, because Indian iron ore availability is good, and Indian iron ore pricing as well is at a discount in comparison to global. So this falling iron ore prices is something that should stop first. Then we can expect a rebound because the raw material cost will benefit on the coking coal cost side, because that has fallen. But all of that is important. So just want to make that point as well.
All right, take that point. Thank you, Nigel, for putting the spotlight on the steel sector, and the iron ore prices, something that we'll be tracking very closely. Take a short break, come back on the other side. Pritesh Mehta joins in with some trading strategies. Welcome back. You're watching us here on a halftime report. Perfect time to get you up to speed with all that's taking place in the F&O side of things for the market. Well, the Nifty is pretty much in that range, 24,900 to 25,100 thereabouts. 25,130, which was yesterday's high. The Nifty Bank is a slight underperformer today, was an underperformer in yesterday's trading session as well. No problems with the mid-cap index, continues to outperform just the way it did yesterday. There was a near 800-point rally on that index. Add to that, we have another 400 points today as well. And all through today's trading session, the advance decline has been favoring advances, even though the lines have been coming closer together. So let's watch out for the second half of trade. Why is the second half important? Because you have the Nifty Bank weekly options expiry playing out. And the Nifty Bank, the range is pretty clear. 51,000 thereabouts is where we have the 20-day moving average, and 51,400. So this 400-point range is what the street is playing for. 51,400 is where the 50-day moving average is placed. And that's exactly how the option writers are positioned as well ahead of the weekly options expiry. So if you look at the 51,300 call in the Nifty Bank, that is fairly active. We have a premium of almost 45 rupees, telling you 51,350 upwards of that would be some sort of congestion, and it also has the highest amount of open interest at that strike. At the lower level though, 51,000 put equally active with a premium of 40 rupees, telling you again 50,945, where the 20-day moving average is where the supports come by. For the Nifty itself, the 25,000 put writers are fairly active, telling you that the base is increasing higher from 24,900 to around 24,950, and the 25,100 call, that will be the most crucial to track from here on, because it still has about 73 lakh shares in open interest. 25,100 call is a premium of 55 rupees. So if the Nifty crosses yesterday's high and stays above the 25,150 mark for a long time, you could see these shorts run for cover, or else it's the range that we will be in. Couple of stocks that are seeing a lot of long positions being added. Bajaj Auto is one of them. A huge jump in open interest along with a huge jump in share price. So long positions out there. And Bajaj Paints is the other one which stands out in terms of long positions being added.
Okay, all right. Thanks very much for that, Manglam. Well, we have Pritesh Mehta, who's joining in to talk about the technicals of the market. Pritesh, hi, welcome to the show. Well, the mid-caps are going from strength to strength. They've outperformed on a week-to-date basis. Would that be a sector that you would approach at these levels?
Yes, mid-caps are looking attractive. And I think nothing is wrong with Nifty also, despite the crash that we had in Friday's session. See, one thing I keep on checking every now and then is the list of stocks marking fresh 1 month high, 3 month high, or even 52-week high. That particular list of stocks is getting bigger and bigger. So I think the breadth of the market is pretty much strong. And we also have different sectors participating. We talked about broader markets; they are going strong. FMCG, IT, they have done well recently. So I think this particular change of leadership is going on very well. One missing link is the underperformance Bank Nifty. It is way below the peak of July. And I think till that time we don't see any kind of participation from banks. I think market is going to consume time at top. 24,500 on the upside, 25,500 on the upside, and 23,900 on the downside.
Okay, and specific stocks, Pritesh?
Yeah, so one stock that has got a attention from broader markets, United Spirits. So it's a classic uptrending counter. The correction moves have been quite shallow. It has multiple bullish patterns at play right now. So buy United Spirits for a target of 1850. Stop would be around 1370. And second stock, I'm slightly favoring the large caps also. So Bajaj Finance, I want to put my bet on. So Bajaj Finance is coming out of a 4-month trading range. The stock had not done anything prior to this, and we're expecting follow through to come into bullish anchor column. So buy Bajaj Finance for a target of 7900. Stop would be around 7200.
Right. Just this one, just out of syllabus right now. TVS Motors. Do you have a view on that one? And Page Industries as well. Page Industries actually seen a fair amount of traction today, up around 4.5%, with a lot of volumes piling up as well.
See, if you look at the auto space in particular, this particular stock, TVS Motors, M&M, they went through a bit of sideways consolidation, but again, they have been holding on to their support zone very well, and every dip has provided a buying opportunity. So when you look at the overall chart performance, the broader chart patterns, it is looking interesting. I won't be surprised if you see 10 to 12% on the upside for this particular stock, and also it is outperforming auto index as well. So I think strength will continue in TVS Motors.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for joining in and giving us all of those stocks and strategies on the technicals. We need to take a short break, but up next, the government notifies major changes to highway toll collection rules. More on this story once we're back. Stay tuned. Welcome back. Well, for the markets, there's specific stocks which really stand out. So we've mentioned how Bajaj Auto is seeing a good amount of volumes in today's trading session. It's the best levels that we've seen in a year. But really doing well is the entire FMCG space, which has, in fact, on a week-to-date basis done well. So Britannia is at a fresh 52-week high. We have Hindustan Unilever, which is at a fresh 52-week high in today's trading session, along with ITC, which is at the best levels in a year as well. Just watch out for Zomato as well, which is showing a large amount of turnover on the Bombay Stock Exchange and is sitting at a fresh 52-week high. So a couple of stocks which are seeing some amount of traction on the upside. But let's now talk about MTNL. The account is likely to slip into NPA category for most lenders in Q2. This is after the state-run telecom operator defaulted in repayments. Ritu has details of what the lenders' concerns are and this important story. Ritu, over to you.
Well, here's the case of MTNL, a government-owned entity which has defaulted on its loan repayments and is now asking state-owned lenders to take a significant haircut, a proposal which has not been well received by banks. After missing loan repayments for the past few months, we understand that MTNL is expected to slip into the non-performing asset category for most of the lenders in the current quarter. The likes of Union Bank of India and Bank of India have already classified the account as an NPA, and others like State Bank of India, UCO Bank, PNB are also likely to follow suit. Now, banks have made it clear to MTNL, while they are open to restructuring options, including a possible debt-to-equity conversion, they have firmly rejected any request for a haircut. Now, MTNL, if you recall, had previously proposed a repayment plan offering to pay about 40% of its dues only, which we understand banks have already turned down. And our sources indicate that lenders have made representations to the Ministry of Finance officials, stressing that a haircut from a government-owned entity will send a negative message and set a troubling precedent for the industry. Now, collectively, lenders have an exposure of nearly 7,900 crores to MTNL, and this is where they will have to make higher provisions in the current quarter, with the account slipping into an NPA, while another 27,700 odd crores of the company's debt is in bonds, which is backed by a sovereign guarantee. Now, MTNL had disclosed earlier this month that it defaulted on 519 crores of repayments to Union Bank, Bank of India, State Bank of India, PNB, Punjab and Sindh Bank and UCO Bank, and some of these lenders that we spoke to said that given MTNL's weak financial position, it will probably require an intervention on external help in the form of capital support from the Government of India for the company to be able to meet its repayment obligations. A meeting of the MTNL lenders is expected soon to deliberate on this debt recast plan.
Take that point. Thank you, Ritu, for that. That's about MTNL. Meanwhile, before we slip into a short break, just keep an eye on a couple of other stocks. Oracle Financial Services, that's the one that's spiking. It's done fairly well this year. It's up nearly 175%. A stellar move is what we've seen on that counter, and every dip on that one is being bought into. Canfin Homes is the other one, which is sitting with a gain of almost 2%. And Indus Towers, the stock was under a wee bit of pressure because of the weakness that we saw in the telecom space, Vodafone Idea in particular, over the last few trading sessions. But now, yesterday, there was a statement coming in from Kumar Mangalam Birla and Pilani Investments buying a small chunk of shares in Vodafone Idea. Then there are reports of the company raising funding worth 35,000 odd crores as well. So if all this were to happen and the telecom industry is back in shape, good financial shape, the biggest beneficiary of that would be Indus Towers, and perhaps that's what the street is betting on right now. Indus Towers spiking to the high point of trade. Take a short break, come back, get you more on the markets and a lot of other specific stocks. Right, welcome back. You're watching us here on Halftime Report. Ikta, you are spotting some news?
Yes, absolutely. You know, Aurobindo had come out with a piece of news earlier, so maybe we should just pull up the stock. Aurobindo is in focus on account of a US FDA approval, which they've got. It's the first product that they've got in terms of approval from their new injectable facility in Andhra Pradesh. Now, this new facility is called Eugia Steriles. It's a 100% arm of Eugia Pharma Specialities and a step-down arm of the company. It was inspected by the US FDA from March 28 to the 5th of April. So they've now received approval for lidocaine hydrochloride injection. And that's the reason why you're seeing a little bit of traction on the upside for this particular stock. This particular injection is used to cause numbness or a loss of feeling for patients, used for many medical purposes. It's the first injectable approval that they've received from this new facility, and hence it's positive for them.
All right, so that's about Aurobindo Pharma. Mildly positive right now, but if you look at the stock price move over the last 3 months or the 6 months, you'd see it's been in a bit of an uptrend of its own, outperforming the other stocks in the pharmaceutical space itself. Take a short break, come back, get you Manisha Gupta, who's joined by Mahesh Gadhvi, who's the CEO of Surat Diamond Bourse, on all things commodities. Stay tuned.
Well, the Congress party on Monday alleged that only 8 companies were functioning at the Surat Diamond Bourse, the facility inaugurated by as the world's largest and most modern center for international diamond and jewelry business in December last year. It has capacity of 4,500 offices. To get the update and all this and more, I have with me Mr. Mahesh Gadvi. He's CEO at the Surat Diamond Bourse. Mr. Gadvi, hi, thank you so much for joining us. And of the 4,500 offices in the Surat Diamond Bourse, we understand that very few are occupied right now. Why is the occupancy low, one? And what is the total number of offices that are functional from there?
First of all, there is nothing like 3,000 or 4,000 offices can start in a day or in a first day. But yes, we have more than 4,500 offices, and steadily we are progressing toward the opening the offices. Right now, from the 7th July, around 250 offices have started, inaugurated their offices, and they have started their business from Surat Diamond Bourse. But as the market conditions are not favorable in terms of diamond industry, a few of them are doing the business on a weekly basis or twice or thrice in a week from Surat Diamond Bourse. But yes, steadily we are progressing toward opening more offices and starting more businesses from Surat Diamond Bourse.
Mr. Mahesh, there also have been concerns about infrastructure that is still being created. I remember when I saw the place, it was pretty done at that point in time. But how is infrastructure right now?
There are two aspects. First is the infrastructure within the building. So you can see that, and you have witnessed personally that the infrastructure of building is the world class. Everything, whatever the required for the diamond trading is available within the building. Number two is the other external facilities like a transportation or infrastructure in terms of city. So in terms of if you see the roads and the entire dream city, the infrastructure are in place. The only thing which is the transportation, which was at the time when you have visited last time, was in progress, and right now Surat Surat municipality provides the transportation specially for Surat Diamond Bourse from the city area to Surat Diamond Bourse. On hourly basis, buses are available to come and to and fro from Surat Diamond Bourse.
Mr. Gadvi, there also are concerns that the businesses were already established in the Bharat Diamond Bourse, which is situated out of Mumbai, and now there is Surat Diamond Bourse as well. There have been reports of a lot of push and pull between the two bourses.
There is no actually push and pull for that particular thing. See, what we have created here is the infrastructure where before Surat Diamond, it is compulsory for all the traders or businessmen to trade and do business from the Mumbai only. Now they have options. So whosoever, as per their business requirement, want to do the operation from Mumbai, from Bharat Diamond Bourse, or from Surat Diamond Bourse, or anywhere else in the world. See, this is the infrastructure what we have provided. Now it is the business and the decision of the businessman from where to start the business.
Mr. Gadvi, not just that, there also is a political pull to this, because a lot of statements from various political parties also suggest that a lot of business is being shifted from Maharashtra to Gujarat, and this is perhaps one of those.
I don't think any such reason. And see, if there is anything or everything is happening, people will mix with the politics. But as far as diamond business and Surat Diamond Bourse is concerned, we don't see any political factor for this. It is a pure business thing wherever there is business, whenever there is a boom in business, people will start doing their business.
Mr. Gadvi, as you said, 250 companies are as of now functioning out of Surat Diamond Bourse. What are the companies saying to you? What is the conversation? How many more are now coming, let's say by Diwali or this year end?
Before this, at this Dasera, in this October 12th, what we are talking right now is a big trader in Surat, 30 to 40 traders. They are starting their operations from Surat Diamond Bourse on this Dasera. And by the Diwali, many people the exact figure is not, exact. There is no exact figure in terms of number of offices, but many people are interested and they are looking at to start their offices, because on week basis we are receiving the request for starting their fit outs. That shows that the more offices and the businessmen wants to start their business from the Surat Diamond Boost.
So, Mr. Gadhvi, how has the overall business been? How many offices already have been taken? What are you hearing in sense of numbers? As you said, yes, there are 250 that is started, and that's less than 10% of the total number of offices within SDP.
This all depends on the overall business, and as you know, the diamond business is affected with the it goes with the international market condition also. So it is all depends on the how the overall business will proceed. Based on that, people will start their businesses. That is the main factor. And in terms of, I like to add one more thing. In terms of infrastructure, as you said, the last time we are discussing the custom clearance house yet to be opened. But right now we have full-fledged custom clearance house has been started and operational from the Surat Diamond Boost. And as we are talking right now, some parcel for Dubai and New York being exported from the Surat Diamond Boost.
All right, that is good to know. But Mr. Gadhvi, also, one of the bigger companies, manufacturer of natural diamonds, which has been Kiran Gems, I mean, they took a huge place in Surat Diamond Bourse and they moved back within a couple of months itself. And we do understand that various other companies also followed suit. What is the impact that you've seen of that? Are you in talks with the Lakhanis over this?
See, every businessman has right to protect their business and choose whatever they want to do. As far as Lakhanis are concerned, one of their firm is right now operational from the Surat Diamond Boost. So it is not like that, as you see that the Kiran Gems just left the entire Surat Diamond. It is not like that. There are some business decisions they have took considering the overall business conditions, and based on that, still there are companies owned by the Lakhanis are being operated from the Surat Diamond Boost. And Vallabhbhai Patel is our committee member of Surat Diamond Boost. So there is no, something like there's some other or wrong message are there in market.
Mr. Gadhvi, also, what would you say about the construction? Because there have been various reports suggesting that the construction is still underway at Surat Diamond Bourse. Is it completely finished? Is stuff still being done there?
In terms of infrastructure and whatever the facilities to be provided by Surat Diamond Bourse has been 100% completed. Now the furniture which is going on is within the offices. So the businessmen who want to start their operation from the Surat Diamond, they are doing their fit out works within their offices. But for Surat Diamond Boost, everything is completed in terms of infrastructure.
A final question then, Mr. Gadhvi, and is the project, would you say, still testing waters? Why is it taking such a long time to take off? What are the conversations really? Because it has been 8 and 9 months and we haven't seen it see the way it was anticipated that it would take off.
No, I don't think that. First of all, this is a big infrastructure and it is a world-class infrastructure. So, moving the market or changing the entire scenario in a short time, it is not it's not going to happen in a one day. It's a steady process what we are right now following also. People are moving steadily and they are starting their businesses. So it is nothing like that we have expected that on a single day, the entire 4,500 offices will start from Surat Diamond Boost. Yes, when we say it is already sold, when 4,500 offices are sold, so people think like that the 4,500 offices will start from the day one, but it is not the case. Actually, yes, the only the difference what we have expected and where right now the only change is the overall market condition of the diamond industry. That is the only factor which is affecting Surat Diamond Boost and entire industry. That is the only factor.
All right, Mr. Gadvi, we take your point on that. So out of the 4,500 offices at the Surat Diamond Bourse, as of now, the occupancy is 250, which is less than 10%. But as Mr. Gadvi tells us that the market conditions are difficult. The last 2 years for the diamond industry haven't been so great. So it is taking time because of that. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.